All right, welcome everyone. Welcome to Cutcher Neale. So I'm Wade. I'm an associate in the investment services division of Cutcher Neale, and I also have Brad Oldham here, who is our risk insurance manager. Give you a bit of an overview as to who we are and what we do. Essentially, we are the wealth management arm of the firm, and we provide financial and investment insurance advice to over 350 clients. We currently have in excess of 400 million in funds under management, of client funds under management, and we've got 10 staff within the division. So there's 6 advisors, including myself and Phil being the partner, and also Brad, who's the risk insurance advisor, and we've got 4 support staff members. So that's an operations manager, 2 paraplanners, and administration assistant. We're currently going through a fairly big growth phase within the division, and we're currently recruiting 2 support members. The investment services team, we hold our own Australian financial services licence, our own AFSL, and what that means is that we can make our own independent assessment of investments for clients without the need of being on a platform or going through a retail or industry fund. We operate a managed discretionary account system. We've only moved to this system in the last 18 months. Essentially, what that means is that we can make investment decisions on behalf of clients without having to get their authority every time we transact. For example, within our managed discretionary account, we run 5 model portfolios, so Australian share portfolio, international fixed income, property, and I'll come to opportunities a little bit later, but essentially what it means is that if we want to buy ANZ within our Australian share portfolio, we can do that on clients' behalf. We don't need to go to them for authority. Likewise, if we want to sell a stock within any of those models, we can transact first and notify the clients later. And the reason why that is important is not only on the buy side. So if we identify a buying opportunity in a stock and we need to act quickly, we can get a good execution price. It's important on the buy side, but it's more important on the sell side. If we want to move to cash to protect clients' capital, the speed of execution needs to be there so we can move to cash very quickly without having to call 350 clients and say, look, we want to sell Apple or Microsoft or Visa. We can just go ahead and do it and we notify them later. Otherwise, we're waiting on a client to respond to us with their authority. It could be days, weeks or months before they get back to us. Basically, the 5 models that we run are all the different asset classes within investing, so Australian shares, international shares. Our fixed income is made up of corporate bonds and listed fixed interest securities, which we won't go into detail. Listed property, so that incorporates both Australian and international property. And our opportunities model portfolio is a little more assertive and higher risk for those clients that have a higher risk appetite. They can invest into the opportunities portfolio, and that's a little bit more punchy and shorter term investment opportunities. So as I've mentioned, we have discretion over the underlying investment decisions within each portfolio, but we don't have discretion to move funds out of one model into another. For example, if a client had 500,000 in our Australian portfolio, 500,000 in our international, we can't move, between portfolios without going back to the client for authority. So we've got discretion over each investment within the model, but not moving between the models. And the reason for that is that that's an asset allocation move, and that comes back to a client's risk profile, which they've signed up for when they first come on board as a client. So we can't change their asset allocation without approval. We also have a self-directed portfolio, which means if a client rings up and says, I've heard about this stock off a mate and I want to buy some, we still have that flexibility to buy and sell any stock on the market. We also have a retail super offering. Retail super is for our smaller balance clients, clients that aren't ready to move into a self-managed super fund yet because their balance isn't high enough. So we offer both the Cutcher Neale and IMED retail super portfolios. So IMED is designed to target our Medico client base. As you've probably heard, a lot of our client base are either medicos or SMEs. We've created an IMED branded product to market to those junior graduates moving into the hospital system. The Cutcher Neale, they're exactly the same. It's just a branding, really. The retail super offering is slightly different to our normal wealth clients in that they move into either a conservative, balanced growth or high growth portfolio, more so than that asset level being Australian international fixed income. So if you're balanced, you'll have a portion allocated to each of the asset classes, but you're at that more of a top-down approach from the risk profile point of view, rather than an asset, direct asset side in being the Australian and international shares. Our communication to clients is key. Clients demand a high level of transparency and flexibility and communication to what we do, and that's reflective of the high net wealth individuals that we look after. We have a morning market update, which you'll see out on the tables in reception. It's also available online through our website. It's sent out to clients every morning. So first thing from 8 a.m. to 9 a.m, we've got 1 hour to write the morning market update. And then that's, we will meet in the boardroom, we go over the content, make sure all the spelling and punctuation is correct, and then mail it out to clients. We also provide clients with a monthly graph, so graphical representation of how their portfolio is going, so hopefully it's moving up, not down. And that just gives clients another touch point as to how their portfolio is tracking. With the graph, we send a snapshot, which Phil currently writes, the partner of the Investment Services Division, and he'll just give a broad economic and market update as to what's happened over the last month. We then send to clients quarterly model portfolio updates, so that's those 5 model portfolios I was talking about before. We'll do a update every quarter to let clients know what changes we've made in each of the portfolios and why we've made those changes. So there could be some quarters where we don't make any changes, or there could be quarters where we've made a whole heap of changes. For example, in the December quarter of 2018, we decided to move to a higher weighting in cash within the portfolios just due to market conditions. And so there was a lot of content written in that, and it gives clients that communication as to what changes we're making and why. On top of that, they get a semi-annual portfolio review, so sit down and or we email it to the clients, but they can also come in and have a face-to-face meeting and go through the overall portfolio structure, how much exposure they have to each of these model portfolios, how much cash has come in through contributions and income, and just give a general update on how their specific overall portfolio is performing. And clients have access to a 24/7 portal. So the MDA, which is the Managed Discretionary Account, which is what we run versus a managed fund, what's the difference and why is an MDA better in our view? Really, a managed fund, you don't know what you're invested into. You'll just pick a balanced growth, high growth, but you can't really see the underlying shares. You can't see where I've got ANZ Bank or BHP, or you don't know what you actually own. So the MDA gives that transparency and more flexibility in that you can buy and sell any stock. And that leads into the direct asset approach, which is listing all those shares that you own FX capability being that we take a unhedged currency view at the moment. So because we're heavily into international shares, especially US shares, for example, if we buy Apple or Microsoft, we send Australian dollars to the US. If we trim some profits out or we sell that position, we can keep it in US dollars without it being converted back to Australian dollars and then convert it back again to US dollars when we find a replacement US stock. And that's very important because there's a spread, what they call a spread on foreign currency. So every time you're converting, you're getting charged a spread. It's similar if you go overseas. There's the spot rate, but if you go into the bank or Travelex, their rate that they're quoting is not always the actual spot rate that's trading at. Dedicated investment advisors, so clients can call us at any time, have conversations with us, send us emails anytime, organise a meeting with us anytime. In-house investment committee, all investment decisions are made on the third floor boardroom. We meet every week to discuss what's going on around the world, discuss what Donald Trump's up to, discuss what Brexit, Britain leaving the European Union, where that's up to, federal election coming up in May, where are we at with that? Is Bill Shorten getting in? How's that going to affect the market? We have a top-down approach, so we look at global macroeconomics, which will form the basis of our themes. So, for example, our themes at the moment are technology, global e-commerce, cashless society, healthcare and pharmaceutical, those type of themes. So then we'll target specific sectors of the stock market and drill down into each company within that sector and decide, which companies we believe will outperform over the long term. So, for example, in the cashless society theme, that's where Visa and MasterCard fit into our international model, or technology stocks like Apple, Google, Microsoft and so forth. We own them based on that technology play. And of course, access to global markets. It's a unique offering that we have here compared to other firms, that you have access to global markets and it's the direct asset approach, not a managed fund. A lot of firms in Newcastle will go down a managed fund path. We prefer this direct asset approach. And we also have access to property, some unique property investments. So we built a Kmart at Port Macquarie a few years ago, and we're currently building the first two-storey Bunnings in Newstead, which is a couple of kilometres out of the Brisbane CBD. That's expected to be completed within a few months, so that's all being with client funds. And the reason why we decided to move into have this relationship with Wesfarmers and build these or have these investments is that term deposit rates in Australia are quite low. People are demanding a higher yield and a higher income, and without having too much more exposure to the stock market, people are comfortable with property, rather than going down a residential property investment where you could have a new tenant every year or every couple of years. We've locked Kmart and Bunnings, Wesfarmers, into a 12-year lease, and they're offering about the Kmart is paying 7.15% yield, and the Bunnings is, while it's being built, is paying 5%, then moves to 6% once it's operational, and that's indexed every year. So I guess the MBA over a managed fund, they're the reasons why we're better: more transparency, more flexibility, and just access to more unique investments than your traditional industry fund. That's me.
I'm going to keep mine pretty high level because I guess fundamentally risk insurance is something that not everyone knows too much about, and you guys have probably had a whole lot of different things put in front of you today. So I guess just initially though, why would we bother having a risk insurance person at Cutcher Neale? ultimately, you've probably already heard from people, like the tax guys and the super guys, and Wade from investments, and probably Dean from mortgage broking and finance. So the whole picture really is about looking after our clients' whole financial life. And ultimately, that's where I fit in, and where this fits in with our clients is that we need to also consider their financial risk if their health isn't good. So really, that's the core of why my role exists here. I started this division up about 5 years ago at Cutcher Neale, and at the time the partners decided that it was worthwhile having someone in-house who I guess had similar values to everyone else in the firm, and wanted to make sure the clients were treated the way that they should be. And I think I'm doing that. I believe I am. So yeah, ultimately it's about having just another part of our clients' financial life looked after for them. The way I view it is probably different people have different views about this thing called life insurance, and some of those views are not necessarily all that flash. If I really boil it down, it's purely that it's just a mechanism that if something goes wrong, that at least your finances are in place. And the important part about that is that then people could just focus on those health-related issues, or worst case if it was death, then focus on that process of grieving and or getting better. So the stuff that I deal with is probably not necessarily the most topical or enjoyable stuff that a lot of people think about, but I think it's pretty practical. The reasons that I guess, or some of the reasons that my role works well for the client base here. I'm a salaried employee, just like each of you, which is a bit different to a lot of insurance brokers, and I am a qualified insurance broker. So what that means to me personally, and also to our clients, is I'm totally impartial. I do not have to, and I get no pressure from any of the partners ever, to write any particular business, put policies in place. The only requirement that I have from any of the partners and from myself is that we put the right stuff in place for that client. And on occasions I'll recommend that they don't do something, which if you really go down the path, it means we may not be remunerated at a certain level for that. But that, in fact, is looking after the clients, and that's what's most important. So I only use the top tier retail insurers. There's about 10 of them. That market's shrinking with this Royal Commission, with the banking and all the rest of it. A lot of the banks are selling off their insurance divisions. So a couple of them have already done that, and there's another one happening at the moment. So that doesn't really matter. There's still about 10 of them out there. There's some good operators. There's some that are difficult to operate with, but again, that's my role, and I'm accredited with all of them. So I don't have to choose anyone in particular. I choose the one that's most appropriate. Sometimes that's based on product and price or product, but often it's a mix of. And the goal that I've indicated there, really the bottom line, is that if something does go wrong with the client's health, that they're no worse off financially, so that they can continue to support their family, or perhaps live a life that, whereas it may be altered, at least it's financially supported. So it's important that we're able to achieve that. The main types of insurance that we deal with, which I'm not going to bore you with, you're probably unfamiliar with them, but they are all fairly important, and I consider them all for each of our clients. Critical illness is one of those ones where it covers off some of the nasty things like heart attack, cancer, stroke. So it's actually about a defined medical event, and if someone has this type of insurance, it's a lump sum payment. So if they had $100,000 or $200,000, they'd get that money, and that might just give them some additional money, for instance, to pay for some better medical advice, or go to a place that provides that, which may cost them money to be at, or have family come to them. So it's about providing them with some extra funds to look at some of those extra costs they're probably going to have. Income protection, really, really important. It's the old saying, what's the most important thing that you have? Well, it's actually your ability to earn an income, because if you don't have that, you can't pay your mortgage, you can't pay for your car, you can't put food on the table. So that one's a really, really big one with pretty much all of our clients. Total and permanent disability, unfortunately people do sometimes reach a point with their health that they can't ever work again. So again, there are some insurances in place which can help them financially to, maybe pay off the mortgage or get a more appropriate vehicle or whatever it may be, help with some care that they may need. And death cover is obviously death cover, so it's a pretty defined event. And we look at stuff there to make sure that that anyone who's left behind, I guess, is at least not financially left out. So who are my clients? The clients of mine are clients of Cutcher Neale, basically, plus some family members because I do need to look at that sort of whole view of, okay, it might be one thing that we may have a doctor, for instance, who earns a lot of money, but if something happened to, say, his wife and they had some kids, well, there may be some money needed to assist there so that the doctor can continue in his role earning the main income. So there's a few variations to how we look at things. A lot of our clients, as Wade indicated, are high net worth, and some of those who are transitioning into that point are high income earners, but they've probably got a lot of debt. A lot of them do. So that's why this stuff's really important. That debt stuff is covered if the worst case happens. The small to medium enterprises, so a variety of different types of businesses that I might look after. These are personal needs for the individual. However, there are some business-related components to this, which can be quite complex and quite enjoyable from my perspective. We look after quite established medical specialists, so some clients who earn significant amounts of money. But again, they have these needs. Some of the newly qualified professionals that are coming through, whether that's medicos or lawyers or whatever it might be, the insurers recognise that their earning capacity is quite significant in the short term. So there's some special products, if you like, that they have around those that we can help often with our younger doctors. Put some stuff in place now that sets the platform for them, that as their income and their debt levels and everything changes in the future, they've got a base to work from with this insurance stuff. And doctors in training as well, we can set some stuff up at a very base level for them. The other thing that I do, look after a number of our staff, and that's for them and their families. The reality with all of this stuff is I deal with some fairly confidential information, and I'm talking about our clients' health, for instance. So the information that I get is not shared with the partners. It's, to be quite frank, none of their business, and they're not interested anyway. And likewise with the staff, obviously I'm dealing with confidential information around salaries and the like, and that remains with me. Partners do have access to that, but that's the level of confidentiality that we maintain with this stuff, and I do. So ultimately, that's a snapshot of the insurance side. The real picture is it fits in with everything else that we do here. The approach is very softly, how can we help you? Making sure that we present something to the client that makes sense, both hopefully practically but also financially, so that they feel a bit more comfortable with where they're going. Any questions at all? Okay, thank you.